Hey traders, Richard here from Euler Prime, and in this video we're going to be looking at one of my favorite, also a very common corrective pattern called the cup and handle pattern. As I mentioned, it's a corrective pattern, but it's also a trend continuation pattern, meaning that this pattern forms during a bullish trend, and when you do get a phase where price corrects, it then shapes that of a form of a cup and handle before the trend then eventually continues, in this case bullish to the upside. Now, to illustrate what I mean, firstly, I'll actually draw the actual cup side of the pattern, and you'll very quickly see why it's called a cup and handle pattern, because it resembles that of a cup with a handle part, right? So this being the cup part and this being the handle part. Think more of a teacup rather than your square type of cups, all right? So that's pretty much what the pattern looks like. And the reason why I drew that first is just to assist me actually draw the price action using a path tool. So generally you'll have, let's say, price move into a high, and then it starts making its way lower. And it does form this sort of rounded shape to the downside. It then moves into or gets close to where the actual pattern started from, and then it creates the handle part, and then eventually finds support and breaks out to the upside. Right, so that's just a nice picture perfect type of illustration of what this pattern actually looks like. Right, so there's also different ways that this can be traded, a bit more of an aggressive way as well, a more conservative way, but I'll show you that next on actual chart patterns that formed very recently. Right, so recently there was actually a cup and handle pattern that formed on one of my favorite instruments, the NASDAQ. Now, these cup and handle patterns form on any market and on any time frame. I'm just using the NASDAQ as an illustration. So if you look really closely, there's actually a beautiful cup and handle pattern that formed over here. This was on the 5-minute time frame. Again, could be on any time frame. So what generally gives away the cup and handle pattern is this roundish sort of formation that you get as price declines against the established uptrend. All right. Again, this is a trend continuation pattern that forms during uptrend. So you've got a bullish expectation that price will break out to the upside once the pattern ends. All right. So here, just as an illustration, there was a beautiful cup as well as a very short-lived handle, part of the cup and handle formation, and then price eventually broke out to the upside. They had a very strong, nice move upwards. All right, so just a few tips and tricks that you need to consider here. When you're dealing with a cup and handle, before we actually talk about how to trade this, um, generally you don't want to see a very sharp decline followed by a move up. And I'm talking here about the actual cup part of the formation. So you don't want to be seeing a V-shaped bottom top of reversal. That generally means that it's not actually a cup and handle that you're dealing with, and that the breakout you're going to get is probably not going to be as potent or strong as expected. Then also your handle part of the formation. You don't want it to actually extend too deep. So keep in the back of your mind what a cup and handle would look like on a saucer, like a tea cup, right? You don't want to get a handle that looks like this. You want a nice little small handle on the top. That also means, and the reason why you want to see that is because as soon as the handle side started, there wasn't that much sellers interested in this trade anymore, resulting in a very strong breakout to the upside. So the buyers were supporting this little move to the upside, well, very quickly stepped in, and it was a strong breakout to the upside. All right, so how do traders generally trade this? Well, very easily. They'll tend to go and measure the height from the top or the rim of the actual cup side to the bottom of the cup, right? And then they want to take that same height or range and go extend it to the breakout point of where the pattern finally breaks out after the handle part out of the pattern and price continues to the upside, right? So this is a beautiful cup and handle formation. It might sometimes be that your actual handle part of the formation extends a little bit lower in like a trend line type of action, if that makes sense. This one we could probably say had a bit more of a horizontal top to the handle part of this. So you just want to wait until a breakout actually happens and then enter into a trade. That's a bit more of an aggressive stance, just getting into a trade as soon as price actually breaks out. And I would say recommend wait for a candle to close outside of the breakout, right? Above the actual handle part. So not where it wet, like we had a few instances over here. That's more of an aggressive type of entry. Now, if you want to use a bit more of a conservative entry, then traders will often wait for a retest of that breakout level like we had on this candle. Actually, it happened a couple of times, giving you a few times opportunity to get long and then trade to the upside. All right, so that's a bit more of a conservative entry way to do things. Problem with that is price might just run away and you might not get a retest of that level. All right, so how do we actually trade this? Set targets on this. Let me just make that green so it stands out a little bit more. So we already measured the height or the lip from the lip of the cup to the bottom of the cup, and we extended that to the breakout area. Whether you actually took a trade there or you waited for a retest, you want to be using the height there extended to the breakout level, and then that would be your target, right? Target level. And generally, after the breakout has occurred, after a candle broke outside of the handle part and closed, then as soon as you get in, whether you use the aggressive or the retracement or conservative method, your stop loss can then be set at a little distance away from the bottom of your handle. All right. So that would just very quickly be your target. This will be your stop loss right over there. And that'll be your entry level here, right? So we can just put entry there, whether you use, now I'm just going to assume we use the retracement there, right? The entry level. Again, a bullish trend continuation pattern. So you're going to expect a bullish move to the upside after consolidation that resembles that of a cup and a handle. Very easy to spot. Maybe not as easy, in real life as price is doing its thing on the hard edge right hand side of the screen. But obviously, this is in hindsight. But as I mentioned, if you get this rounded type of shape or formation that forms, then that's typically a dead giveaway that you're dealing with a cup and handle. Right? Just then wait potentially for that handle part to form and make sure that it doesn't extend too deep to the downside, as I mentioned prior or before. That is just a good indication you might get a very strong breakout to the upside. All right, that's the cup and handle pattern. Very simple, bullish continuation pattern. Happens during uptrends. Your expectation is that you're going to get a bullish breakout. And hopefully next time when you spot one of these on your chart, it'll be easier for you to go and draw that shape out and then also know where to place your targets when you get that breakout finally after the handle part, and also where to place your stop loss. Again, thanks very much for watching. I'll see you in the next one. Take care and goodbye.
Euler Prime. Trade with transparency.